ERP, as we know, are the new softwares for businesses to organize or structure, or you can even say share information across the business with no time. They also manage the various business transactions in a very systematic manner. The basic purpose of ERP is to give a complete, or say a unison in the enterprise when the transactions are taking. Every department can share their information at a speed of with great speed. So you don't need to wait for the information to flow across. You can access it instantly. So say there is, what we are going to do today is we are going to understand how an organization structure gets built, because we will also be creating our own fictitious organization structure. How is accounting setup positioned in this? So there are two things which require here. So let us get into this PPT and see. This is a very common organization structure which I have taken here for demo purpose. There could be manufacturing business, retail business, services businesses, or construction businesses. They might have some little difference in their structures, but by far this is a very common model that is used. What this model says is, in this diagram, an organization will have companies. Okay, there will be multiple companies, a business group. So we have British group, which has got British Gas, British Telecom, and they have more businesses under that flagship, a group. So a group can have multiple companies. These colored cards, what you see here on the screen, represent companies in the group. For these companies to manage the transactions, the businesses of these companies, we have divisions. They are being divided into various divisions. So as I gave the example right now, British group might have divided their companies. They keep their telecom business separate. Now telecom business might have these departments to carry on their day-to-day activities. Telecom department will have a sales team who will take care of all the sales people who have subscribed for their services, telephone services, their prepaid cards, or any other services, their mobiles, or their talking cards. So they will take care of how much sales needs to be done, how much marketing needs to be done to sell their products. Manufacturing teams, service teams will take care of their independent jobs. Research and development teams will research and identify what new product needs to be introduced in the market. They will do more research on that, which will be more beneficial for the customer. So all these things are done keeping customer and shareholders in mind. So these are various departments that are there in any company to perform its activities and transactions. So likewise, every company will have these departments with their divisions. So now say here there is a USA company. This is just an example. We can replace the names with anything. A business has got two companies here. These two companies are in USA. One is in California and the other one is in New York. And they have some divisions here. They take care of the USA company 2 take care of retail business and infrastructure business. In California, USA company 1 takes care of, say, transportation or manufacturing business in New York. So lines of businesses on business axis, it shows the lines of businesses that a group owns, that a group is dealing with. So likewise, a group might have businesses across the country. USA is one. They might even have in UK, or they also have in France. So these cards represent companies across the globe, and these are the divisions. What you see here are their representations in Oracle applications. What we call these components in Oracle application. Company is termed as legal entity. Why? Because all the local government's requirements, say reporting taxes or registering with the local government, and they then issue some identification number for these companies. We call it a TIN or any other registration number. So any company which is registered with the local geographical area in that country will have a registered number. So it complies with the legal aspects of the business, filing of taxes, understanding what taxes business need to pay in the geographical region. If a company in France, if this business has set up a company in France for they're expanding and they want to move to France, other areas, other parts of the world too. So if they have set up their company in France, they will have to comply with the French rules and regulations. What are the accounting standards that France has? How do they want businesses to do accounting? This is also dictated by the government. How revenue is booked. All this is dictated by the government, which a company needs to follow. That's the reason these companies are termed as legal entities in Oracle application. These list of values of the companies. See, under this companies, we also term them as balancing segment values. Why? Because in USA, there will be one legal entity, USA. Under that legal entity, you can have multiple companies. Multiple companies in the sense, your businesses. A company taking care of retail business, a company taking care of infrastructure business, a company taking care of manufacturing business. So these are various companies which will fall under legal entity. But there will be only one entity which will be on top of these companies and which will be doing filing of taxes for all those companies falling under this legal entity. Ledgers, also these companies are responsible for booking their profits and reporting their expenses. So their financial statements, how do we book their financial statement? How can we prepare the financial statements? It happens with a feature called ledgers. Ledgers are nothing but a book where we book the transactions, what is going to be debited, what is going to be credited, what are the various accounts, payables, receivables, assets, all these taken care by ledger. So that also belongs at the company level. Then we have independent segments in Oracle application which hold all these information. We will see how to design those segments and how all this information can be captured in that segment. We'll see. So a structure of a business looks like this, and the transaction of a business is taken care by these two components. One is the organization structure and other is the accounting. So when a transaction is taken place in organization, it records many information, not only the accounting aspect, but it also records the information depending upon the company, department, and based on that, managers or higher level people can draw reports. Say for a company, how much business has been done, or how much has the sales department spent in last 6 months, or how much expenditure was done by, or how much revenue a product has earned in a set period of time. So there are two key business attributes. One is the business attribute, which we've been discussing till now. The product, quantity of the product, price, address, taxes, and the accounting attribute is the debit and credit side of a transaction. So Oracle Financials uses these two key attributes to record a transaction. Take for example, there's a business where a man is selling, say, some mineral water bottles to a customer, and how is he going to record that? He records it in a voucher, and what all aspects of the transaction does he record? How many items were sold, the currency of the item, or the product he has sold, the date, which is very important to identify the date. When the auditing happens for the businesses, the date also matters a lot. And yes, of course, when we are drawing financial reports for drawing on specific period of time, we need calendar and dates. And the accounting, the method of accounting. Did the customer pay upfront? If customer pays upfront, that means he has paid cash. So the person selling can record it immediately in his books that my revenue earned is so and so, the $500. But if customer says you make it on credit, or give me a credit for a couple of weeks, I'll pay you after a couple of weeks. So immediately the person records in his book that this is on credit, and it goes to some other account for the time being. It's been deferred, or it's going to get paid later on. So today my earned revenue is 500, but after 2 weeks I'm going to earn 500. So accordingly he will use accounts to enter these transactions. So here we have mix of both the business attributes and the accounting attributes too. So in Oracle, to capture these kind of transactions, they have devised two cornerstones. One is the organization structure, and second is the accounting structure. With the help of organization structure, we determine which organizations, which companies these transactions falls under. And with accounting structure, we determine what accounts do these transactions hit, whether it's going to be asset account or cash account or liability account, which is mostly important for the accounting and reporting purposes. Accounting structure is where we need to record our transaction. So it is done in ledger. Last time I think we did touch upon a little about ledger. Else we will go ahead and understand what a ledger is. See, a ledger is nothing but a book. In olden days, when there was no software, how do they used to record these transactions? They used to have huge books. They used to have huge books with some lines drawn in tabular form, where they will record the detail. On the left side, they will record the detail of the transaction, and on the right side, they will record the debit and credit part of it. So that was those days. Similar concept has been implemented in ERP. Earlier in 11i, a version prior to this, it used to be called a set of books, but that was not what it was depicting the real picture. So this version in R12, they have changed it to ledger. Ledger is the actual word that they use in real time also to represent accounting details. So here also, when we define a ledger, we will have to define these four components. We call them as 4 C's. 4 C's in Oracle application are the components of ledger. Chart of account is very important. Chart of account is where we design that what key information of business will be stored. So whenever there's a fresh implementation, Oracle consultants have to go to the client, understand what their businesses have been, and what kind of businesses they do, what kind of information gets produced, and what kind of information business needs to capture for building their accounting information. Chart of accounts is why we'll discuss about in detail about chart of accounts too. Defining a calendar, currency, and accounting convention is also very important. So when we say chart of account is nothing but the list of accounts here. This is one part of it. List of accounts, how these lists, what all accounts will they be using. There will be thousands to thousands of accounts that a business will be using for recording its transactions. We have here various types: assets, liabilities, equity, income. So this is one part. Chart of account is basically made up of some segments. Okay, let me just show you the other PPT. So in this, I have taken some example, not very real. These are from real-time projects of mine which I have performed. Here you can see various types of chart of accounts. Chart of account is nothing but the combination of multiple segments. There will be these segments. Just like here we have segmented these segments, a company, cost center, line of business, accounts, and one for future transaction. Why are we segmenting this? Till now we've been talking about how does business needs to capture key information, but how is that going to happen? Business needs to capture the business attributes and accounting attributes and the quantity of the transaction. All those things we are talking about, that these are the key information that a business needs to record. But how? That is what chart of accounts takes care of. Oracle, what they have done is they have created segments in their database. Okay, database is where all the information gets recorded. So there we have some tables, some columns, some rows. So in those tables, they have identified some segments with specified space limit. Say for company. Now company is one segment where I will be recording list of companies that my business has. So in this segment, what do I have? List of companies. Cost center is nothing but a center which is responsible for doing businesses, or you can also call it as a department. So where in this there will be list of departments: HR department, finance department, accounting department, IT department. Some will have, depending upon your line of business, they can also record here. Now all these are very much specific to the nature of the business. This is for a trading company. We can say this. Now this one is for chart of account for a manufacturing company. Now in manufacturing company, they also want to know how much each location has done business and how much each product has earned revenue. So the values which you can see here are nothing but the values stored in these. They will be stored in the form of a code. A structure will have segments, values, and value sets. Value sets are nothing but list of values under that segment. Say company, there is 001 code which represents ABC Corp, or 002 which represents some XYZ corporation. Cost center 003. We need to identify every segment, what the length of that segment is going to be. If it's 3, then the codes which I use to represent those values will have to be only with the length of 3. So 003 cost center is production. Say department is production department. Location, it is Mumbai. It's represented by 122. It's a city in India where, say, this company, this manufacturing company is doing business or manufacturing their products. this segment accounts has got one account, say material 73100 is a code for this material account. So here these are only samples. Like this, there will be many list of values defined. So we'll see how to design this and how to enter these list of values too. So this is one example of a manufacturing company. So this says segment in chart of account represents dimension required for financial transaction. So say for manufacturing company there are 6 segments. It depends what all information a business wants to capture. Accordingly, we can design segments. Oracle permits up to 30 segments, but in real time barely 9. 9 is the max that a company can use. What all a company needs to record the transaction about the company, right? Which company did the transaction, from which department the transaction was done, which account was affected, which product was impacted, which location did the transaction happen, or if you are doing an intercompany transaction, then among which intercompanies it is done. At the most, I think 9 or 10 can be used in real time, but 9 is also a huge chart of account, and that is also for a very, very huge line of business we can use. Till now, in my experience, I have worked only till a 7 segmented chart of account, not beyond that. So all this is very much business specific. Now, values, as I said, are nothing but the list of values stored in that chart of account. These things we'll study in due course of time when we get into the application. So when we are designing chart of account, we'll discuss more about chart of account because that's a very important part. So when we discuss about chart of account, what all we need to consider. Calendar, it's very easy to define. Currencies will be seeded in the application. Oracle seeds all the currencies of all the possible countries in the world. So we don't have to define that. And accounting convention is also something which Oracle provides the standard one. If we have any changes in the method of accounting, say we have US GAAP. So if US GAAP does some changes, say no, this is not how you can record your revenues. These are not the accounts which should be hit, or this is not the process of recording your revenue. So in that case, they will help doing customization in the accounting method. I'll explain this accounting method a little later, not now, because it's a very deep concept which we need to understand properly. So here I will stress more on defining of chart of account because that is the main configuration to get started. Okay. When we have to define a ledger, these are the 4 C's we need to attach to the ledger, and chart of account is a very important part to be considered. Once defined, once we define this in application, we cannot change it. So always what happens is whenever there's a fresh implementation, or say somebody has set up a new line of businesses, say in one of my projects I did in California, where they had this plant newly established. It was a new plant. So they required Oracle application also to be implemented because their other plants in other regions were using ERP too. So for this, they hired us to understand their chart of accounts, to design their chart of accounts. So there were a lot of meetings. A lot of meetings will go into this. We will have to talk to the clients, understand their business, and then with the help of all this information, design a chart of account, and then finally get approved by them. So once the designing happens, we can define in the application. So what this says is COA is nothing but list of accounting flex fields. We call them as accounting flex fields. These are some naming conventions that we will have to get used to it. As and when you will do practice, you will see a lot of these, and it will anyways come into your routine. What does they mean? Accounting flex fields is nothing but your chart of account or a way to record your business, key business information. The consideration we need to keep in mind when we are designing a chart of account, which country it is. Okay. Every country will have their different rules for business. India has different, USA has different, UK is different. So what country the business is in, what type of industry is very important. If it's a retail industry, right now, just a couple of slides back, we saw the chart of accounts, right, for manufacturing and for other business. So what type of industry it is needs to be considered. Organization. Now, if there are multiple organizations or there's only one organization, just want to give an example of the plant getting installed, or they are putting up a plant in California. Now, is that the only business they do, or they have in other locations too? If they have in other locations too, there will be more organizations, more operating units, more departments coming in picture. So if there are more organizations, your design of chart of account will differ. So how many organizations have modules implemented? How many modules have they implemented? Say all modules of ERP or any third-party interferences are also there. I mean, people, what they do, mostly businesses, they will be using an old system of recording transactions, say Tally or Vertex or any other for before they switch to ERP. So this Oracle ERP has the ability to even connect to these legacy systems. We call them legacy systems, or say they don't want to use Oracle applications payments module for doing payments, but they want to record only invoices in Oracle application, but payments they want to process from some other software. So here, when we record invoices in Oracle, how does the detail of these invoices get interfaced or transferred to the external system where they need to do the payment? Because to do the payment, we need to have the invoice detail, right? What was the invoice and what was the supply, who was the supplier, what was the amount to be paid. So like this information gets transferred from one software to the other, and we call it as interfacing. So third-party interfaces and systems also we need to consider and accordingly build our chart of account. So we discussed about country consideration, industry. I just now discussed the manufacturing, how many segments we need for a business. This all depicts like this. If it's a project-related business, a project-oriented business, which takes a lot of big projects, then are we also capturing the project-related information? This is about multi-org if it's headquartered only in one location or there are subsidiaries here. If there are more subsidiaries and if there are more transactions among these subsidiaries, then it's always best to create one intercompany segment. Flex fields. These are all naming conventions. Flex field is nothing but collection of structure. A chart of account is nothing but a structure. It's a collection of all the structures. And the collection of all structures is called as accounting flex field. So we'll see more about this when we go into the application and design one. These are key flex fields in Oracle application. All the modules, general ledger, assets, purchasing, accounts payable, inventory, order management, they have their independent flex fields, which we call them as key flex fields. They are the primary source of recording these transactions. So in GL, we have accounting key flex field is owned by general ledger module. And a new flex field introduced here is GL ledger flex field. This is mostly for reporting purposes, which we'll know a bit later on. We also attach qualifiers here to identify what each segment is for. Say company, we have defined company segment and we have defined all other segments, but application doesn't know, right, what they have to do. So we need to attach qualifiers. We will see the practical orientation of all this, because getting into theory will be too much. So just give me a moment. I'll connect to the instance. I'll be going offline because it takes some time for the instance to get connected.